most market participants are still focused on the private sector. Look how loose financial conditions are for the private sector, because that's all that's mattered for the last 40 years. But what we're seeing in treasury markets, financial conditions are far too tight for the federal government. When you go back through history and you look into these situations where the federal government of any nation that can print its own currency needs more money, and the private sector is already seeing secularly high inflation and tight unemployment, guess who wins that tug of war? It is the government 100% of the time. They print the money, they get their liquidity. To your point, this is just in recent weeks. We're still in the why are they doing this phase. But what follows the why are they doing this phase is, oh my God, we're Brazil, we're Argentina with US characteristics. And that I think will come in the next probably 3 to 6 months if I'm conservative about it. It could come faster, but that's why the US government is a fiscal problem.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, the question on everybody's mind is, what's going on with Bitcoin? Why is the price not going up, right? Now, some people have attributed potentially the sell-off to the fact that you did have the founder and CEO of the cryptocurrency mixing service arrested and charged with money laundering and unlicensed money transmitting offenses. And this is the website. It's been seized. So I'm not really going to say the name of the website, but obviously, this is creating a lot of issues. Specifically in the US, this is not looking too great. However, realistically, guys, I don't think the news has that much to do with the price action. It's been a bit of an unpopular opinion lately, and I've noticed in the comments that people just don't want to, sort of hear the fact that we may be in this consolidation where we could potentially see some lower levels for Bitcoin. But I'm just going to say right now, that if you're panicking, that is the complete opposite of what you should actually be doing right now, because there's about to be a major shock to the system. And you might have kind of got a little bit of a hint based on the intro to this video today, but I'm going to go over what is most likely probably going to happen and why I do believe that we could potentially have that opportunity that everyone has been looking for. There is so much to go over today, guys. I highly recommend you stick around to the end of this video, because when you realize the bigger picture of what is truly happening right now, not just in the US, but in the world overall, compared to what is happening with Bitcoin, I think you'll understand what's secretly kind of happening in the background. So I hope that by the end of this video, you guys understand where I'm coming from and why I've had this short-term opinion, or at least what I'm seeing in the charts for Bitcoin. But long-term, this thing is going to get absolutely bananas, guys. And friendly reminder, if you are looking to trade, don't forget that they do have a $3,500 bonus over on Blowfin. If you use the link below in the description, you will get that bonus, obviously based on your trading and your deposit. So let's start off super quick with the chart. Again, I can tell there's a lot of negativity in the comments. And, the thing is, guys, is I'm not just going to talk about stuff that I think people are going to want to hear, right? I want to tell you what I'm seeing and what's going on. And one of the main reasons why we were talking about this Bitcoin correction, right? We usually have these 20 to 30% pullbacks, but if we have a look at the stochastic RSI, you don't usually see continuation of these moves until you have the stochastic RSI starting to curve back upwards, right? That usually signals the end of the sell-off, and we're still only kind of in the 70%-ish range, right? So this is what's suggesting to me potentially that yes, there could be some more, room to the downside, but ultimately, you're dealing with these very constructive patterns, right? For example, like right here, look at this. We had consolidation. Right here, we had consolidation. And right here, we're having the exact same consolidation. But for some reason, every time the markets dip 20%, everyone freaks out and suddenly everything is out the window, which is not the case at all, right? As we can see, there is a likelihood that as Bitcoin continues to get rejected off the top of this parallel channel, that you could move somewhere to the bottom of this channel. You could even have a bearish fake out like down here. But I ultimately think that regardless of what happens, that would be very healthy for Bitcoin. And there were a lot of things that were aligning sort of around a $55,000 to $58,000 area. But, like Titan of Crypto pointed out, There's nothing in the charts that is suggesting that this is the top. I mean, even right here where we didn't really technically have a blow off top, right? You still see these massive reversal wicks, right? These insane selling. You see that's when people are, that's enough. I've made enough money in this bull run, and that's when you start to see people selling. And if we come over here, we're actually seeing more buying on the bottom side. I mean, if you have a look at the candle right here. So again, there's so many different reasons why we're range bound in this area. But don't forget, guys, while we consolidate under the 4.236 area, which is around that $73,000 area, take these dips with a blessing because, yes, again, you have the 0.786 around the $57,000 area, which I know nobody wants to hear the fact that we could go to those levels, but it's very possible. But you have to understand that in a constructive pattern, even having, this parabola that we have right now for Bitcoin, once we do break through, the next area of interest, because now we're in price discovery, is the 1.618, which brings Bitcoin to about $102,000. So if you were concerned about not being able to get enough Bitcoin or not being able to, get enough altcoins, I would say that based on, history, these are the opportunities, right? The closer we get to this 21 exponential right here, the better the buying opportunity. And honestly, sometimes you don't even touch that level. And currently you can see we're sitting very well above that. And not to just point out the confluence, but that level is around $55,900. So again, I'm not saying we have to go to these levels. In fact, you generally don't touch, the 21 EMA on the weekly when you're in these bull trends, but there still is a lot of confluence around that area. As I've said, where I believe we are right now in this market is the same area that we were right here, right? We were consolidating under the previous all-time high, and we were wedged between the two moving averages of the pi cycle indicator. And once you break through that, as I've showed you guys multiple times, that basically took us a 240% move last markets. And realistically, the first top happened in only about 147 days. Now look what we're doing right here. We're doing the exact same thing. Let me see if I could just reset this a little so you guys can see. So we're, retesting the top area right here. You come over and look, we're doing the same exact consolidation that we did back there. Oh, and not just to mention it again, but look at where the lower level is for this moving average. It's right around $56,700. So, I'm just saying there is that possibility. But here's the thing. Here's the thing that's happening. If we look at the dollar index is actually potentially running into this downwards sloping resistance. Now, why is this happening? Well, as we kind of stated, a little bit hinted earlier in the video with that intro clip, I think you know what they're about to do. These money printers are going to go absolutely freaking insane. And I'll get to that in just a minute, but I hope I'm not in the way for this. But again, if we just look at the MVRVZ, that's a mouthful, score, you could see that we're still only just in this range right here. And this is usually a range that we tend to play around in the mid-cycle. We haven't had any of this crazy blow-off moments or anything like that. And also, like CryptoCon pointed out, you generally have some form of a double top on this RSI, and we've only just had the first top. So to put that into perspective, that would be like being right here in January of 2013, or here of March 2017, or here of November 2021. So, look at the charts, look at where we are. And again, I do still think there's potential for some short-term downside price action. There is a possibility that, who knows, maybe this is a giant bull flag that's forming, right? And then that's a possibility. But ultimately, I think you're looking for that move to the upside. So, just remember, guys, Bitcoin is still relatively new. It's only been around for 15 years. If you compare that to basically the internet adoption, you could see that Bitcoin actually is arguably catching on a little bit faster, believe it or not, than the internet did, probably because it's on the internet and everybody uses internet. But, this is what we're looking at, guys, right here as total users. We're only really around 300 million roughly, okay? There is a lot more of this adoption to go. And before we move on, talking about central banks, talking about money printing, there is this amazing video that came out a few years ago from Godfrey Bloom, and he really breaks down the situation of the banks. And before we get back into everything Bitcoin related, I really think that this is a video that everybody needs to see.
It is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real cost of money. And yet we blame the real retail banks for manipulating LIBOR. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely, in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer.
And we all know at the end of the day, the money printers will get turned back on. And I think you're realizing, or at least people are realizing, I do believe that, ultimately we are a lot more financially literate. I mean, you could joke about the TikTokers and all that stuff and Gen Z, whatever, but for the most part, there's a lot more interest and a lot more understanding in the world right now when it comes to finances, right? This, especially with the internet and things like Twitter, right? With all this, basically, I don't even watch the news. I just, you can go to Twitter and you can get the news before the news even has it, right? And it's probably a lot more honest than the news. But, getting back to the, for example, what BitMEX founder Arthur Hayes was saying, he was discussing in a blog post, he says, as we exit the window of weakness that I forecasted would occur due to the, we also mentioned the US tax payments, right? Some people unfortunately had to sell some of their crypto to pay their taxes. I want to remind readers why the bull market will continue and prices will get sillier on the upside. Rarely in markets do the things that got here, Bitcoin, for example, from zero in 2009 to $70,000 this year. This is basically how you get to $1 million Bitcoin. However, the macro setup that created the fiat liquidity surge that powered Bitcoin's ascent will only get more pronounced as the sovereign debt bubble begins to burst. If you thought it was absurd what the US monetary and political elites did to solve the 2008 global financial crisis and COVID, well, you ain't seen nothing yet, right? But, maybe I am a little bit too hard on Gen Z and TikTok. Maybe they do have it all figured out.
USA is in debt. Everybody's in debt. Why don't we just print more money? And hold on, because I've heard the whole inflation, it'll go up topic. Well, just don't. Just don't make it go up. Let's just get the printers going. Let's print some more money. Like, aren't we the ones printing money? Hold on. Let me really logically think about this. The trees make paper. The paper is money. Okay, so we cut down more trees, snip, snip, and we print some more money. The world would be a better place if I was president. No inflation, nothing goes up. We just print more money. We don't just give it away, but we print it and then we're not in debt anymore. Because aren't we like a lot in debt? Okay, I'm not stupid. But for real though. Should I go tell the president? Hey, I know we were having some financial problems. I just had a little idea. Print some more money. Isn't it just that simple? I feel like so many world problems are just have really simple solutions. What other, I guess the printers, they cost some money. Maybe labor for whoever's printing the money. I'll print the dang money. And then the trees, the ink. But other than that, hey, we got more money. Just don't.
I sincerely apologize that you had to watch that, but if I had to watch that, you have to watch that. So, I don't know, whatever that was. Seriously though, let's talk about something a little more realistic as to why you're going to end up seeing Bitcoin continue to appreciate. And Jack Mallers was over here speaking with David Lin. And of course, he's still in the camp like I am that there's going to be $1 million Bitcoin, but we have a crisis in front of us, guys. And it really seems like in these types of moments, this is why people turn to Bitcoin.
I just don't think that enough people have a big enough imagination of this upcoming cycle I'm expecting. I mean, the bond market is in trouble for really arguably the first time in modern financial history. Bondholders are getting absolutely demolished and crushed. Now, David, who owns bonds? All of our banks. So our bank deposits aren't there because the bonds that were purchased with my deposit is underwater. And so if central banks and government is going to try and save that market, the amount of liquidity that's needed is going to send assets very high. I mean, you can try and do napkin math. And I joke, like, how many COVIDs are we going to get if they try and bail out this market that we're in today? You may get 2-3 COVID. So if that happens, it's impossible to speculate on an asset as scarce as Bitcoin, but I think 250,000 to $1 million is the imagination I have in that range of just how big this can get. And that's based on all the liquidity that's going to be required to make this market solvent.
I've also been hearing some discrepancies about whether or not these ETFs have been successful, or if they're having massive outflows, or what's going on. Are these guys selling? Now, there are a few people that have pointed out that there are some major shorts on Bitcoin right now. But if you ask me personally, okay, I think they might be able to scalp it, right? We could go down to the 55, 58K level. Maybe they win. But eventually what you're going to end up having is a massive short squeeze. And I think when that happens, that's when we break the $74,000 range. And that's when we can escalate very, very quickly towards $90,000 to $100,000 for Bitcoin. And right now we're in that boring stage, but I'm going to tell you, this happens quicker than most think. You're going to be bored. You're going to be not paying attention. Everything's going to seem like it's falling. You're giving up. You're losing hope. And then you're going to wake up the next day and Bitcoin's going to be at $80,000. And that's exactly what these markets do. They have these insane moves. They have these retracements, these cool off periods. A lot of people start walking away. They get bored. They think it's over. They start panicking. And the next thing you know, they're missing out because now they're like, well, should I buy? Well, you could have bought at 55 or 60, or maybe we won't go there, but you know, they're going to call you up and say, should I buy now? It's going to be 80, 90, 100, right? But let's talk about the ETFs, right? Let's see what's really been happening with these numbers. So BlackRock's Bitcoin ETF has entered the top 10 all time for longest sequential inflows. And this is an update from Andrew. So BlackRock's IBIT will eclipse Grayscale by the end of the month. Don't look now, but Fidelity is on the same path. Oh, and by the way, guys, BlackRock has had 70 consecutive 70 consecutive days of net inflows. So, I mean, that's pretty incredible, guys. It's literally been over 2 months of solid inflows. And yes, we are seeing a decrease in Grayscale, and that's good. And it's creating an equilibrium. And you could argue that, you know, it's kind of topped out here, but the fact that we continue to see GBTC falling, okay, they had about 46%. And now they have around 36%, which is good. But they said soon enough, you know, Grayscale will plug the leak and stop the outflows. If not, they simply run out of Bitcoin to sell. And this is the only reason really why we're having these prices being held below these levels. But this is all healthy, right? This is what you want to see in these markets regardless, because again, look at all these massive inflows, right? BlackRock did $37.9 million this was a few days ago. Yesterday, I'm sorry. And the outflows of Grayscale increased compared to the 66.9 million. So ultimately, like they're saying, the markets are probably gonna remain boring until these sellers are exhausted, and eventually we will run out of them, right? Also, don't forget the fact that El Salvador is buying 1 Bitcoin per day. Not that that's a huge amount, but they are doing that. But look at what Eric Belchunas points out, okay? We have new high water mark for investment into one of the Bitcoin ETFs. 2 different advisors each put in $20 million to FBTC. One is from Kansas and the other is from Minnesota. So you have more of these big players entering. Look at this, guys. Morgan Stanley considers allowing brokers to recommend spot Bitcoin ETFs to their clients. Now, remember, I had explained to you that these things take time, especially with these bigger players, right? They kind of need to see a track record. They need to see that the product is legit, right? They want to see the inflows. They want to see the performance. And some of these still, this is going to sound crazy, have allocation periods of waiting up to 4 to 6 months before they can actually start recommending it to their clients. So again, We're only just getting started. Trust me, there's a lot more capital that will be deployed. And again, the money printer's going on. You have the new US Senate bill that could encourage banks to enter stablecoin markets. So again, just going more digital, getting more into crypto. And, here's just a side story. Here's breaking news. The state of Ohio has officially introduced a bill to protect fundamental Bitcoin rights, the right to buy and sell Bitcoin, the right to mine Bitcoin, the right to run a node, and the right to self-custody your digital assets. So while everyone's freaking out, about Biden proposing 44% for capital gains for millionaires, which is ridiculous. I mean, I've really never understood that system. Let me know what you think about this in the comments, because this is something I've gone through. Like, as I've made more money, I get taxed more. And I just don't understand, like, why are you punishing the people for making more money? It should just be like a flat rate. I don't know. What do I know? I'm crazy. I don't, do policies like that. But side note, also, don't forget, guys, on April 30th, we have Hong Kong looking to debut their Bitcoin and Ethereum ETFs. And there is a lot of money in China, guys, and these big whales that have not had the opportunity to allocate to this asset class, they are going to jump into it. Now, is it going to be as big, excuse me, is it going to be as big as the US ETFs? Well, we don't really know. I mean, that's to be seen how big it catches on. But again, there are a lot of people in China, and they are going to utilize the Hong Kong hub in order to gain access to these cryptocurrencies. So this is kind of where I wanted to end on this video. We had Mike Alfred. I really love following this guy over on Twitter. Sometimes he could be a bit of a troll, but it's funny. I love reading his comments. And, first he's talking about how he has a target of Bitcoin for 90,000 relatively soon, like within the next couple months, which I think is very plausible. But, he just kind of summarizes again what I've been trying to say in this video. And I know that, like, the popular opinion is not that we're going to go down maybe necessarily, or people don't want to hear that. But I think what we're doing is we're just setting up the base. We're just coiling up like a spring, and we're getting ready for that blast off. But ultimately, I think this perspective really breaks it down.
The market is not slowly dropping. It's consolidating sideways, and people capitulate because we don't make a new high every single day. Today's price action does not change Mike's conviction of what might happen in 2 months.
Yep. And it definitely doesn't change it over 5 years. Right. And again, like my time horizon is 5 or 10 years on Bitcoin. It always has been. Most of the Bitcoin I own today was acquired in the end of 2018. Right. And going into 2019. Right. So the vast majority of the Bitcoin I hold was acquired 5 or 6 years ago. Right. So I held all the way through, going all the way up to 70 and all the way back down to 16, right? So like, I'm not selling because we are going from 66 to 63, because I think we're ultimately getting to $1 million within 10 years. And that interests me a lot more. Like, candidly, $5,000 Bitcoin moves don't change anything in my life, because if you're not liquidating any of your coins and you're not spending them, then it doesn't really matter. Like, the price on the screen is just the price on the screen. You could choose to act on it. But I would argue that most people shouldn't. Like, Bitcoin is this really, really unique collateral asset. Is super pristine. It's got beautiful monetary policy. It can't be disrupted. Like, why would you trade that away for fiat right now? Like, it just seems crazy to me. But
I just have to point out that, like, this is the sentiment, is that we're dropping, like, that we're dumping. Zoom out, guys. We were at 17,000 in November of 22. This has been up only with some sideways consolidation in the middle. But you're going to get bearish because we're sideways for a little while. Just think about that. Like,
and we're up 42.
There will be a top, and you'll be correct, but we're up multiples, 4x on a huge asset from the bottom. And we're talking about slow bleed. You shouldn't be bullish. I mean, I'm trying to help you guys. Not, this guy says Scott is triggered because he's losing so much. You're literally watching a YouTube video and complaining about the content that you're choosing to watch. I mean, think about that for a second, because you can't handle the fact that someone thinks price is going to go up. Then short.
Well, Bitcoin is up 42.8% year to date, and the S&P, as going in today, it was only up 6.97%. Right. So Bitcoin's beating the S&P by 6x, and the S&P is going to drop again today. I mean, so the Bitcoin drop is already priced into that year to date number, right?
Yeah.
Because we already know Bitcoin's going to be down today. We already know the miners are going to be down today. Again, doesn't really matter though, because what really matters is like, what does the Bitcoin price do over the next 1, 2, 3, 4, 5, 6 quarters during what should be kind of the peak of the next bull cycle for Bitcoin? And historically, those numbers always surprise people to the upside. Like the way I think about it really simply is I think there's probably 10 or 15K of downside max. And that's probably like, I'm probably being too bearish in saying that, because realistically, maybe 55K is the bottom. So you've got like 8K of downside, and you've got something like 250K of upside from here. So something like 30 times the upside to the downside. Generally, when you see those types of setups, it's like it's sports betting. Like you don't necessarily have to know the winner of each game, but if you take bets where you have a slightly positive expectation 100 times, you might only get 51% right or 53% right. But if you take those positive expected value setups, you tend to make money over time. It's about systematically compounding your capital. And to me, this is that high value, the super high value area for long-term holders of Bitcoin. Like if you want to add, or you need a new position, like you basically want to start taking it as aggressively as you can now, because again, even if you go to 55, if you're at 90 or 100 in 3 months or 2 months, then what's the difference?
So that's it for me, guys. Thank you so much for coming back to the channel. Hope you had a great, having a great day. Hope you have a great weekend. And this is just sort of what we're looking at. So, I've seen in the comments, there's a little bit of negativity. Some people are bummed out. They're bored. Look, guys, it's not going to be like up only, and it's not going to be, crashing only. Sometimes you get these really boring consolidations, but these consolidations are very, very healthy for the market. You really don't want markets to just go up in a straight line, because usually when you have that type of move, number one, you have a shortened cycle typically. Number two, you don't get to some of those higher levels, right? Because there's just too many people making too much money too fast. And then you have these major sell-offs. That's where you see these 40, 50% crashes. So again, 20% pullback, 30% pullback, that's perfectly fine. And ultimately, I still just believe that we are basically range bound. We're just bouncing around in this area, right? So, we have this right here as the bottom around 61, and we have this right here as the top around 72. So, really, you need to break below this to start getting, I wouldn't even say worried, because like I said, you still have that support. Oh, look at this. Look at this, guys. If we fall straight down, that's 56,000. But I'm crazy, right? I'm crazy just because I'm seeing all these things on the charts. But guys, anyway, that's it for me. Like I said, there's no reason to be bearish. Short term, it could be a little bit turbulent. But again, a lot of people were saying, oh, I missed out on Bitcoin. I missed out on altcoins. I didn't, have an opportunity to buy cheaper. And you have the opportunity to do it right now, but then everyone's panicking. Not everybody. I know not all of you. There's a lot of you in the comments that are just like me. You're not fazed by this, but there's a lot of new people in the space that just really think that markets just go up in straight lines, which is absolutely ridiculous. But once this is done, once we build this base, it's going to be moon season, guys. And by the end of this year, I think you're going to be quite surprised. We have these very conservative targets of, if we look at the, for example, just come over here. Why can't I find it? And we look at these Fibonacci extension areas, we have a conservative about 102, an average of 155, and a super high of around 240,000. So I don't think this market is anywhere over, and I think any of these dips are for buying. Not financial advice, do what you want, but I've been looking at the screen, looking at this chart for 8 straight years, and I could tell you it doesn't repeat, but it often rhymes. So I would say, whatever happens in the next couple months, I wouldn't freak out. You can trade it. You can try to short it. I'm not shorting right now. I'm not interested in shorting. It doesn't really make sense to me. You can short if you want, whatever. But I personally would just be looking to load up on the dip. And if we do hit some of those lower levels, that is a better opportunity to re-enter into a long. I think there's more potential upside than there is down, right? I think the risk to reward for the price going up is a lot better than trying to short these 20, 30% dip, moves to the downside. But hey, you do you, guys. And if you do want to learn how to trade, check out these tutorials popping up right here, right now. LevX is still doing the match bonus up to $5,000. Blowfin, you can deposit and get $3,500. So that's it for me, guys. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. Until next time, stay crypto. And of course, peace out.